Smethurst, and CEO and founder of Dolphin Capital, based in Hanover.
So here today we have Charles Smethurst, CEO of Dolphin Capital GmbH, and Barry Graham, an introducer of business in Ireland who deals with a lot of our investors. So Barry, if you'd like to ask a few questions to Charles.
Thank you, Lisa Marie. I think as investors in Ireland who have suffered a great deal in terms of a variety of investments, be it through stocks, shares, property, there's a degree of reticence, obviously, to go into anything with the money, and security is of a paramount importance. The security behind Dolphin and the structure of that, it is an asset-backed security by my own understanding. How have you structured that exactly to represent investors?
So basically the security is very easy. It is the same security a bank would ask as well. So what we will do is basically we put the investor into the first charge of the land register, which means there's nobody behind, which also can influence certain problems on the property. So the investor is the only one who is in the land register, registered at the first place. As a bank would ask exactly the same thing. So there is no difference between a bank security and then the security of an investor. If there are more than one investors, because we always ask for the first charge for all the investors, if there's more than one investor, we are using a trustee which is working on behalf of the investor, who is holding the first charge for the investor group, let's say.
So Barry, for a lot of investors, they're curious about where the properties are coming from.
Yeah, certainly. Again, they don't have a familiarity necessarily with the German market, with German cities and demand ratios for property. Obviously, because you're operating in a very much a niche market, you must have a forward plan of where you feel property is going to come from. Not necessarily city by city, but perhaps East Germany, West Germany. Where do you see the next 2 to 3 years supply, if that's a fair question, coming from?
Basically, we have a clear strategy where to invest and where to put the money from the investors into which location. So in the east part of Germany, we concentrate mainly on the big cities like Leipzig and Dresden. Dresden is nearly finished. Everything is more or less refurbished. Leipzig is still room basically for projects. The reason why we invest in those cities is because of the development of the economy, of the big companies which are located in these areas. All the other places are mainly in the west part of Germany, and the west part depends, of course, on the value of the region. So we are investing, of course, in Berlin. Berlin is at the moment the hottest place for investors in Germany, as well as for foreign investors. And then we invest in cities like Hamburg, which is the second, most expensive city in Germany. Then in big cities like Düsseldorf, Cologne, and the total south part of Germany. South part of Germany is a rich part of Germany, basically. And even the B locations, let's say, not the big cities like Munich, Stuttgart, which is very, very expensive. Munich is the most expensive city, are very attractive. Like Augsburg, for example, is very close to Munich. Has got a motorway, and in half an hour you are from Augsburg into Munich. So these cities are becoming more and more important, basically, for these type of investments. But this is the areas we are concentrating on.
So, yeah, I suppose the exit strategy is of huge importance for investors.
Very much so. Obviously, as I keep saying to all investors, that we have a situation where you must remember to get out and leave a little profit for the next person on the list. What is the exit strategy? And as I understand it, it's quite a short window.
So already at the beginning, basically, when we discuss with the individual investors, the exit strategy is clearly defined. So we have investment models from, let's say, 1 year to maximum 5 years. Most of them are also short-term, and that is also one of our, let's say, core issues, to have short-term investments, because nobody knows what the situation will be with the Eurozone, etc., etc. So therefore, investors like to have short-term investments to control their money and to know where basically the money is going to. The exit strategy basically is defined in a certain period of time and depending on the sales. So always when we have sold a certain period, a certain quantity of apartments, basically then we can exit the project even before the, let's say, final date at the end of the day, and we are not cutting interest, etc. So we are raising roughly 20% of the money from the investors to finance the project, which the end value is minimum, let's say, 5 times higher as original increase basically or the raise of capital. And when we have sold a certain numbers of apartments, we are allowed by law to draw down 30% from the final value. To give an example, we have raised €1 million from the investors. The value of the project, bank confirmed, is 5 million. So we are raising 30% of 5 million from the bank basically. So which means we have 1.5 million on our account, which allow us to pay back the investor easily the initial investment plus a profit.